Hello, and welcome to the fourth video in the League's Special Property Tax Series. I'm Alan Kemp, Executive Director for the Iowa League of Cities, and in this video, we take a look at the changes made to the assessment limitation system that are part of the 2013 overhaul of the property tax system. We'll get started with a brief review of the assessment limitation, often called the rollback. First adopted in 1978, the assessment limitation system is designed, in part, to restrict the taxable valuation growth of properties. The system placed a 4% cap on the growth of property valuations. If a property class grew by more than 4%, its taxable value was reduced or rolled back to comply with the law. In addition to the growth limitation, increases in the valuation of residential and agricultural properties were tied together, often called coupling. This provision of the law limited the valuation increases of either property class to the lesser of the two. If residential property grew by 4% and agricultural grew by 2%, the increase in taxable valuations for both classes would be 2%. One of the key results from this system was a large rollback for residential properties, which have generally been taxed around half of their assessed value in recent years. This was a result of residential property values exceeding the lower growth of agricultural property, thus requiring residential valuations to be rolled back. Meanwhile, commercial and industrial property values often did not grow enough to require a rollback and were taxed at their full assessed value. A major component of the 2013 law was adjusting the assessment limitation for agriculture and residential properties from 4% to 3%. This new cap pertains only to agricultural and residential properties and begins immediately. For valuation purposes, the two classes will remain coupled. Residential properties experienced a significant rollback in taxable valuation under the old 4% cap. It stands to reason that moving forward, a 3% cap will lead to additional rollbacks for residential property. Many city budgets are heavily dependent on property taxes, with a large share of those taxes coming from residential property. If the residential rollback number decreases, as it has in the past, city budgets will be negatively affected. Cities must also keep an eye on agricultural property values due to the coupling provision. If the agricultural economy goes through a contraction, the residential rollback figure could be driven down as agricultural property values fall. It is recommended to cities review recent property valuation trends and projections to get a sense of how future budget revenues will be affected. We also encourage cities to use the League's property tax model, which gives you the ability to enter property tax valuations and see how the changes to the property tax system are projected to impact your budget. As always, the League is here to help. Please do not hesitate to contact us with any questions or comments you may have. Thank you.